I draw a block on the chart that says here's where the previous 70% of the previous day's trading took place. When if price opens outside of that value area and it moves into that value area, on a 5-minute chart, I wait until a candle establishes in that value.
Okay.
And if it establishes in that value, there's an 80% rule that it's going to fill value. So if you're coming down into value,
You sell it off.
establishes and sells off, there's an 80% chance it's going to fill to the other side of value. If it comes up into value, 80% rule is going to fill to the top. That's one of the trades. So that's an
Very
80%
interesting.
statistic. And Jim Dalton teaches that. And,
That's very interesting.
And from a market profile perspective, it's very interesting to look at. The other trade is the initial balance. The initial balance is the first hour of trading.
Okay.
So when the first hour has happened on the day, I have two lines on the chart. I have the IB high and the IB low.
Of that initial hour.
Of the initial balance. So that's the initial balance. When price comes back up and tests or goes down and tests the IB low or tests the IB high, there is a 90% stat that says it's going to reject it.
So essentially, when you've defined that range of the first hour and then it comes back to test it, you just sell it at the open, stop loss at the high, and
there's a 90% chance it will
insane.
reject it on the first test, not second test, first test.
Okay, let's explore both of these.